today, as we shoot this show, it is Tuesday, January 23rd, and tomorrow we have a rate decision. Now, what was the Patrick prediction from previous? I want to just find out what you did say, and then are you holding firm to what you did say? And you can change your mind. That's okay. I'm okay with that. I won't make fun of you too much if you change your mind. But the point is that what is the Patrick prediction? The rate decision's coming out tomorrow. By the time this show airs, the rate decision will be published. So this is like perfect timing in terms of a Patrick prediction.
Well, I haven't changed. I mean, they're going to hold the rate. I don't think there's much chance of them reducing it. There's some would think that maybe they'll go up a little bit, but that's not certainly what's worked into the math these days. I think they're going to hold. They would be smart to hold. I think it would be definitely the wrong move to increase, given that inflation, we'll talk about that shortly. Inflation is up a little bit, but they're not going to react to that yet. So JG, our subscribers are actually ticking up. Yes, we're winning. So just a reminder, subscribers, and for those of you who are watching this, like, subscribe, comment. Let's get those algorithms growing so we can grow this channel. And just a reminder, hit the like button, hit the subscribe button. JG, we can grow this channel.
Let's do it.
At it.
So let's talk about the bigger conversation, though, which is, okay, I agree, by the way. I think they're going to hold. I think everyone pretty much agrees they're going to hold, albeit we've been surprised before.
Whoa, didn't see that coming.
But there was a big consensus. Like everybody as of late November, early December was kind of saying,
okay, listen, we're going to get a cut. Probably a rate cut in the first quarter, maybe second quarter, but first half of the year, we're definitely getting a cut, maybe an entire full 100 basis points.
That's what a lot of people were saying. We talked about it on this very show. Do you still feel that way now, Patrick, having gone through the Christmas season, the holiday season, the holiday shopping season, and kind of the market sentiment? Where are you at with rate cuts this year? Because I agree they're going to hold. We also agree eventually they're going to cut. When do you see that cut coming?
Well, I mean, it's anybody's guess. We don't know when it's coming, but we also know that we're at the effect of what the U.S. is doing. So we have to keep our eye on the U.S., see what they're going to do. There's been lots of optimism that, cuts. I think the bond market's worked in as many as 6 cuts this year, which is, I think, not going to happen. But it's interesting. So a quarter point, it'll shift the sentiment. Now, our real estate is really driven a lot by sentiment. And when they start to cut even a quarter basis point, things will start to get a little bit more exuberant. And they know that. So they're going to be very guarded around it. Having said all of that, I don't know. With where it's going, I'll be surprised if we get more than a quarter in the first half. I think if we're going to get anything, it'll be in the back half of the year. But what's interesting about historically, if you look at rate reductions, we may get nothing. And the bank, in this case, our central bank, Bank of Canada, could do what they might be expected to do, which is overreact. And they may do nothing, realize that holy cow, we've blown it. We've slowed this economy down too much, which I think is starting to happen. I don't necessarily think they're starting to see it, which is to say they could do a full half or a full 100 basis points in one shot. And that may happen later this year, depending on what happens economically. So as much as we look at, quarter, they may just hold off and then realize they'll wake up one morning and go, oh my gosh, we blew it. And then go, bam. So I think there's a possibility of that.
That's actually a good idea, Patrick. We should have the producers of the show do some research and see when they did do cuts in the past, how big were those cuts? Are they, like you said, are they quick little paper cuts of a quarter basis points, like 25 basis points, a quarter percent, or is it like a full shot? It's very interesting. Your theory is very interesting for sure. But I want to talk about 2 things now that you open up the door to sentiment and bond yields. Bond yields, and I actually have a chart on this, but bond yields have been creeping back up. I was so excited, Patrick, as we approach the end of this year. I was like, yes, bond yields are finally dropping. I mean, we went down from like 4.5, just under 4.5% down to almost 1%. That's massive drop in a short period of time, like just about a month. And now they're back up and they're clawing back their way. They're at 3.51. Man, I was really hoping, Patrick, we were going to crest below. I was below 3. I wanted to hit the 2s.
Well, I think it speaks to a couple of things. First off is just the uncertainty of what's happening on the global macro scale. It's just a lot of uncertainty. As much as we see this volatility, we've never seen volatility like this in the bond market before. And as much as we've ticked up, again, we can come back the other way just as fast. So like you, it is a little bit of, I guess, hopium, if you will, that the bond yields come back down. And then, of course, our fixed rates come down. But having said that, as much as they've ticked up, they can tick back down just as quickly.
Well, and you're right. And if we look like right now, this chart, we're at 3.551 right now, but it wasn't just like 4 or 5 days ago. We were at 3.2 and trending down back towards the low threes. So yeah, you're right, Patrick. I mean, it's anyone's game in terms of where this is going to go. But I could tell you, I do know that some of the fixed rate mortgages are starting to loosen up just a little bit, not a crazy amount. But definitely, I recently seen a 5-year fixed rate at 4.99, I believe, or 4.95. So, and of course, that's the posted rates and so on and so forth. I've also had several mortgages renew that I'm negotiating right now, and many of them are in the 6s, the 7s, even the 8s. So, but the good news is I think it's starting to work its way through the system. That's what we got to do. We got to get ourselves back to equilibrium here so we can inject some positivity back into this market sentiment, because I don't know how you're feeling right now, Patrick, but it's ice cold out there, right? Not only is Canada going through a weather ice storm, so to speak, where that polar vortex just went across, but my gosh, things are just frozen in ice on the market in general right now, specifically speaking to the real estate market.
Well, I think it speaks to a lot of markets, and certainly what's happening right now is that uncertainty. So when we look at when bond yields had come down so much, everybody was already working in those several rate cuts over the course of 2024. There's some optimism going on, and all of a sudden CPI ticks up a little bit, and then everybody goes, whoa, holy cow, it's not what we thought it was after all. So this is just what's happening, and again, it leaves that uncertainty. We've talked many times over the years about the wealth effect, and what's happening right now is people are feeling very poor. They're feeling a lot of pressure in terms of what it's costing to live. The headlines are crushing it. There's a lot of things going on that is shifting this market and the market sentiment, and in all industries, but specifically in real estate. And I want to go back to the point that you made about interest rates and fixed rates coming down a little bit. There are banks that are doing that 4.99, but we have to keep in mind is those are retail sales. In other words, end user homeowners are getting those kind of rates with specific banks. And, there's at least room to negotiate. As investors, we're still not getting that low. At least I'm not hearing about it. Although, we'll see what happens with some of our trusted partners when they start talking and speaking the rest of this month.
Yeah, bottom line on this is the market sentiment is about as difficult as I've seen it in the last 2 years since we started this rate tightening out there in general. That's the kind of feeling I'm getting. I also, it is by far the most laborious time to be doing real estate deals right now, Patrick. But, and I stand by this, this is where the rubber meets the road. This is where the investors that are grinding right now are going to be handsomely rewarded when the tides do turn. And it may take longer than people expect, and it may be more expensive than people expect, but the tides will turn. And those that did the work during this tightening cycle will be handsomely rewarded, I believe, which is why I'm working so aggressively in this market.
What are your superpowers again?
I'm rich.
Well, let me just go on a little bit of a tangent here, just briefly. So, I just came away from the Vancouver Investor Resource Conference. So somewhere between 4,000 and 7,000 over the course of the day, individuals came to look at what's happening in the resource sector. So looking at junior miners, they're looking at gold, silver, Bitcoin, a number of things. The point is that there's a couple of billionaires speaking on stage, Rick Rule being one of them, BD being another. But when they look at certain markets, these guys have got a track record. As a matter of fact, BD has built, I think, $14 billion mining companies. So this guy knows how to produce results. But his fundamental philosophy, and he made a comment on it, but didn't go down that path. It's not his area of expertise. But the point is he goes to markets that are hated. So in other words, as investors, you're right. It's laborious. It's, you have to really grind to get financing. But when you go to a market that is disliked, so in other words, right now, real estate, we know it. We see it with investors. How many are, sitting on the sidelines? How many have thrown up their hands and just walked away going,
I'm out, real estate, it's too scary.
The point is this. As investors who stay connected to the data, get out of the emotion of it, I think like a resource sector, you go to the market that's hated as an investor because it's where the opportunities live. So I just wanted to kind of put that on the table as a thought process that, we see so much negativity around investing in real estate. But to your point, and JG, I mean, you're literally in the trenches every day, and you're starting to see it. Yes, it's hard work, but there are deals there, and that's where the money gets to be made. That's what I got to say.
Absolutely. I think you're bang on, Patrick. And this is very, very interesting and definitely a fascinating time that we are going to reflect on. We're going to be doing like a post tightening cycle recap in a year or two or whenever we do it. And we're going to say, oh my gosh, remember the times. And we're going to recall some of these conversations, no doubt about it. But it is very good. And for those that are willing to do the work, if you're not willing to do the work, there's no easy money to be made, that's for sure. But if you're willing to do the work, the opportunities are there in spades right now, but they are dressed in overalls and they look like a lot of work right now.
It's so true. And I think that, again, I'm going to keep hammering this home, is that everybody looks like a genius at the top of a boom cycle. Everybody's feeling good and making money. The wealth effect's kicked into gear. Everybody's feeling rich. They're spending money. We get into a slump cycle and everybody vacates. Yet that's exactly when we need to have the courage, the knowledge, the data, the community to keep investing to grow our net worth. We'll talk about where prices have come off of peaks. Well, okay, yeah, they're down 30% or 40% off peaks, depending on property type and where. But ultimately, JG, you and I both know this, is that they're off the peak. Well, anytime you compare something to the peak of a market, and then you get into a downturn like this, let's go back to 2018, 2019. Where are prices from there? So it's all good headlines. It's all disasters. If you bought a house in 2022 intending to sell it in 2023 or 2024, well, I don't know what kind of a plan that is. But anyways.
It wasn't a very good plan. Yeah. Bottom line.
Yeah.
Awesome. Well, that's great, Patrick. That covers our Patrick predictions and our Bank of Canada predictions for January 2024.
If you like what you learned here, go to the description below and subscribe for our free Insiders newsletter, where you can also stay up to date for our upcoming events and our courses.
If you want to see more stuff like this, click here. If you want to see the entire show, click there.